Hello, this is Mi Jun, who is sticking to the basics of investing in United States stocks. I'm Mi Jun from the United States Market Theory University. Let's begin today's United States stock news for July 11th. Welcome to Mi Jun, where we continue to stick to the basics of United States stock investing as always. Once again, another joyful Friday has arrived. Personally, I feel like this week went by way too fast. I think it's because I've been a bit busy lately. I have to make Mi Jun YouTube videos, and I'm also consistently posting on the Mi Jun membership. And the important thing is, we only have about 3 or 4 weeks left until we move to Southeast Asia, to Malaysia. So there's actually a lot to do. We have to take care of things like organizing all the furniture, packing our stuff, and there are so many things to sort out that these days, 24 hours in a day just feels way too short. Still, I'll do my best to keep running Mi Jun's YouTube channel as long as I have the energy. Alright, then let's get started with today's United States stock news prepared for July 11th. I'll begin by recapping the expectations from the United States stock market yesterday. First, if you look at the S&P 500 map, it was mixed again yesterday. There were stocks that went up and stocks that went down, mixed together. If you look closely, there are a lot more greens than reds. But since many of the Magnificent Seven stocks are showing red, it feels like the stocks that fell take up a significant area. But in reality, there were far more stocks that went up, and the breadth of the market actually widened. But since many of the Magnificent Seven stocks fell, you could sum it up by saying tech stock returns were just so-so. In fact, if you look at the movements of the major United States stock indices yesterday, all of them went up except for one. Especially recently, small cap and micro cap stocks have been performing very well. This shows that there is a prevailing belief that the United States economy will remain strong in the future. A few days ago, I mentioned that junk bond yields haven't risen much compared to others. The fact that junk bond yields aren't surging means that the outlook for the United States economy isn't bad. That's how we can interpret it. The Nasdaq 100 underperformed yesterday due to a significant drop in the Magnificent Seven stocks. And it's the same when you look at the performance of the 11 S&P 500 sectors yesterday. Only 2 sectors showed negative returns. One was technology stocks, and the other was communication services, which include Meta and Google. Today, I won't be showing you various sentiment indicators. I found an article where I did some technical analysis, and I'd like to read this article to you. As you all know, the United States stock market has been steadily rising recently. Usually, because the temperature is neither too hot nor too cold, it's just right, the stock market is gradually trending upward like this. This is known as a Goldilocks scenario, and frequently following such a period, the stock market's growth rate is usually quite high. Now, the United States stock market has entered an overbought state. So, since the market itself is overbought, should we sell everything and get out? I think some people might have this question. Today I'd like to talk about what the right response is for investors in this situation. The S&P 500 index continued to rise last week, once again hitting an all-time high. SPX, which is the S&P 500, had a small gap filled on its chart, and that's a positive sign. Now, what does this mean? A gap refers to when the stock price moves dramatically all of a sudden, not gradually like climbing stairs, but with a sudden surge, and now that gap has been filled. The price dropped for a while and stayed here, then the stock price went up again. That's one way to summarize it. And the fact that the gap has been filled can be seen as a positive sign. If you look at the support lines, you can see that there are strong support levels at 6,000, 66,020 and 5,920. So if it moves below 5,920, it turns bearish. He says he doesn't expect that to happen in the near future. So from a technical perspective, the uptrend is still considered very healthy. Now what about this breakout to a new all-time high? Compared to the false breakout that happened last February, this one looks much stronger in terms of internal market indicators. Now let's take a look at the evidence one by one. First, there's the stock-only put-call ratio. There are put options which bet on a decline, and call options which bet on a rise. If there are more put options, it means there are more people betting on a decline. But if this ratio keeps falling, it means there are a lot more people betting on a rise. This is positive for stocks, and as long as this ratio is falling, stocks can keep rising. They're saying that the trend is currently upward, and the fact that these ratios are hitting relative new lows on the chart means it's somewhat overbought. But unless these ratios reverse upward and start an uptrend, it won't be a sell signal. So the market sentiment is really good, so it is indeed overbought. Still, until the direction changes, it's right to see that it will keep going up. Let me show you here. There's the put-call ratio. It keeps dropping and the direction is still downward. So as long as the direction doesn't turn around and it keeps falling like this, the upward trend will continue. I think that's how we can sum it up. Now, this time it's market breadth. It's market breadth. Market breadth has shown continued strength for a while, which we verify daily. The two market breadth indicators, oscillators can be interpreted as supplementary indicators. There are various indicators, but it is said that the two most commonly referenced market breadth supplementary indicators are both maintaining buy signals. These are also in the overbought zone, as I mentioned recently, possibly yesterday or the day before. An unusually high ratio of stocks are above the 51-day moving average, which is seen as an indication that the market is overbought, according to analysts. However, when the S&P 500 index is hitting an all-time high, it's actually considered a positive sign for the market breadth oscillator to be in an overbought state. The reason is because it indicates there is broad market participation in the rally. The positive market sentiment reduces the likelihood of a sharp drop in stock prices across the board, not just for a select few stocks. I've mentioned this before, right? There's something called cumulative trading volume range. In English, it's called CVB. This, too, is said to be continuously hitting all-time highs. And how can we interpret this? This strongly confirms the S&P 500's record highs, signifying the market's current state. The cumulative trading volume, so the volume going into rising stocks and the volume going into falling stocks, you compare these. But right now, there's much more trading volume going into rising stocks. And right now, trading volume is pouring into stocks that are soaring to record highs, and this is being summarized as a very strong bullish signal. Next is the number of stocks hitting 52-week highs on the New York Stock Exchange, and this is the second market breadth signal. It is reported that stocks reaching new highs outnumber those reaching new lows. The New York Stock Exchange lists a vast number of stocks. If you compare the number of stocks hitting 52-week highs with those hitting new lows among these, you'll see that right now, there are far more stocks reaching new highs. And this index has only recently generated a buy signal. The recent buy signal is due to the widening market breadth, as indicated by the increasing number of stocks hitting 52-week highs, following a period where only a few stocks were leading the market. And if, in the New York stock market, the number of stocks hitting new lows surpasses the number of stocks hitting new highs for 2 consecutive trading days, this buy signal will be discontinued. However, for now, the buy signal has not been discontinued and is still valid. Next is realized volatility, the market's volatility index. This includes the 21-day historical volatility of the S&P 500. You see it written as high voltage, 20. High voltage stands for historical volatility, and volatility means fluctuation. We're looking at the history of 20 days, seeing how much the stock price moved over 20 days. And now it has dropped down to 10%. The 10% we're talking about here is converted to an annual rate. So after calculating the movement over the past 20 days and checking how much it would move in a year, it turns out it only moved about 10%. And this is a very low volatility. If it's too low, it can be a bit risky, but for now, it's not in the danger zone yet. Technical analysis shows that it needs to drop below 8% to send out some warning signals. Now let me add a word about this. In the financial markets, excessively low volatility can sometimes be interpreted as a sign of impending risk. Now the reason for this is that very low volatility means that market participants have no concerns about the future. It indicates that many people are overly confident about the market's future stability or growth. As a result, the sense of caution toward risk has become extremely low. So even if an unexpected minor negative event occurs, the market could be hit hard because it's not mentally prepared. That's why the recent excessive drop in the volatility index can actually be interpreted as a warning to be a bit cautious. That makes sense. Now, these days there are actually a lot of negative news stories, so the situation is a bit different. Now, the volatility index, which we know well as the fear index, is staying calm despite a lot of negative news. There were two buy signals related to the volatility index: the spike peak buy signal on June 24th and the volatility index trend buy signal that appeared on June 4th. And these two signals are still valid. So if you look at the movement of the volatility index, it's still sending signals to keep buying stocks. And these buy signals? These will remain valid as long as the volatility index stays below the 200-day moving average. This is the chart that I look at with you every day. The volatility index is currently very low at 1618 with the 200-day moving average above it. As long as the volatility index stays below the 200-day moving average, it signals a buying opportunity. I can explain it to you like this. Now let me summarize. If you read the opinions of the experts who wrote this article, they say that as the S&P 500 hits all-time highs and almost all internal indicators are sending buy signals, they maintain a bullish outlook on the stock market. However, these experts are paying attention to various overbought conditions. They will react to any confirmed sell signals. Currently, no technical indicators have shown sell signals, so they keep running. But if a signal appears that indicates a downturn, then they will reduce their positions. They are sharing an investment strategy. Our motto is that an overbought condition does not mean it's time to sell. They summarize by saying that they won't try to predict a sell signal just because the market is overbought. Because the market can stay overbought for a much longer time than we think, that's how you should see it. Now this time I'd like to sum it up with a word from Mijun. From this headline, the United States stock market has entered an overbought state. Should we sell everything? I'd like to give you an answer to this. Personally, I think people who can't accumulate wealth through stock investing have one thing in common. That's greed. A lot of people think that in order to build wealth through stock investing, you need to have a lot of seed money from the beginning. People believe you need at least 100 to 300 million won to make 10 to 20% returns from stock investing and achieve financial freedom. Many people are mistaken in this way. But that's not actually true. If we can secure about 10 million won as seed money, what does 10 million won mean? If we really set our minds to it and work hard, cutting down on sleep, spending less, and taking on 2 or 3 jobs, and keep saving like this, it's an amount of money that we can easily save up within a few years. If you can secure about 10 million won like this, I think anyone can plan a retirement life without major financial difficulties. Now, I've actually proven this with some numbers here. Even a modest investment principal of 10 million won, if combined with an average annual return of 20% over 30 years, can grow into a large sum exceeding 2.3 billion won. Now, I've given an example here. Compound annual growth rate. This is the average annual return, and you invest for 30 years. The initial amount of money you had was 10 million won. It's shown here in pounds, but let's just assume it's in won. Now, if you can make an average return of 20% for 30 years with 10 million won, that 10 million won will grow to as much as 2.37 billion won. Now, if you look next to it, for those of you who have a little more seed money than this, I've calculated it again for you. Even if we achieve an average return of 15% over 30 years, we can grow the principal up to 3.3 billion won. In this case, the seed money is around 50 million won. So if you think, I only have 50 million won right now, so to increase this to several hundred million won and achieve financial freedom, I need to make a huge profit. You might think that way, but that's not true. If we can invest slowly over a long period, say 30 years of 15% return is by no means an extraordinary rate of return. Even if you just buy ETFs like QQQ, you can get a 10 to 15% return. So if you can achieve QQQ's returns and secure a 30-year investment period, 50 million won can grow to as much as 3.31 billion won. Now, even if we assume that there is no additional investment being made, in reality that's not the case. This money doesn't just sit there. We keep adding the money we save from our salaries and businesses. Therefore, the wealth we can actually build can be much greater, or we could even shorten the time period. Now, even without a large investment fund, I want to explain with numbers that most ordinary investors can still enjoy the benefits of the magic of compound interest. But the problem is, many people's goals are set too high. There are so many investors who say, I don't have time, and pursue short-term returns of 40%, 50%, or even over 100%, taking risks that lower their chances of investment success. But the important thing is, when your target return gets higher, your investment strategy naturally changes. Setting extremely high annual return goals, such as 50% or 100%, can have negative consequences. What happens is that many people end up going all in on one or two stocks they're 100% confident in, or they only look for stocks that can grow tenfold and go all in on those. And there are also many cases where people go all in on leveraged products, or a lot of people try hard to time the market. For example, when someone goes all in betting on a rise, what that means is they don't hold any cash at all. They use 100% of their money to buy stocks, because they're certain that the market will go up right now. Now, in a situation where you don't have any cash like this, if a downward trend starts, there's a much higher chance you'll make an emotional sale. You should be buying stocks, but instead you end up selling them. And in the next case, there are also many people who go all in on betting against the market. They're shifting their cash ratio to 100%. In my view, the market has risen too high, and there's a strong possibility of a correction, so I'm holding on to my cash for now. They're basically praying for the market to drop, saying, fall, fall. But in this case, if the upward trend is really strong and lasts for a long time, there are a lot of cases where people end up buying stocks at the peak by making the mistake of buying on the rise. So, if you set your profit target incorrectly, your investment strategy will be shaken, and there's a high chance you'll end up with an unhealthy investment strategy and lower returns. Now, let's say you were very lucky and invested 10 million won. Imagine your 10 million won investment growing to 40 or 50 million won in just 1 year, or your 50 million won investment doubling or tripling through your best efforts. Let's assume this scenario. But the important thing is, just because your 10 million won suddenly becomes 50 million won, or your 50 million won becomes 100 million or 150 million won, it doesn't mean your life will change. If you achieve this level of remarkable success, it makes investors continuously set excessively high investment return goals. Since I once picked something that went up 4 or 5 times, I start thinking, I'll only invest in things that can go up like that again this time. Eventually, that leads to making a big mistake, and just one major mistake like this makes us stray from the highway to financial freedom, which is the magic of compound interest. So, in conclusion, it's impossible for us to accurately predict the future of the stock market or the companies we're investing in. I hope you'll invest with this assumption in mind. Now, if you invest with that assumption in mind, even if the stock price suddenly drops starting today, or even if it keeps rising sharply, our minds won't be shaken. We can continue to stay at ease. If that happens, you can enjoy the magic of compound interest I mentioned earlier, because you can continue investing in stocks for 10, 20, or even 30 years with peace of mind. If that happens, I want to say that you can enjoy your investment journey with the magic of compound interest and eventually achieve the financial freedom you desire. Next, let's take a look at the performance of yesterday's Mijun topic. Yesterday was a mixed market, so about half of the Mijun topics went up and about half went down. First of all, the stock with the highest win rate was Tesla, which surged 4.73% for the first time in a while, and secondly, Advanced Micro Devices performed very well. It created an additional upward trend of 4.15%. Third, Coinbase has also been on a strong run lately, and yesterday it gained an additional 4.04%. Next, B2 rose by 2.84%, and Bitcoin went up by 1.84%, reaching a new all-time high of 118,000. Next, Trade Desk rose by 1.61%, Strategy by 1.52%, and Nvidia by 0.75%, all closing in positive territory. That's how you can see it. The rest of the stocks went down. Amazon was down 0.13%, Uber down 0.25%, Credo down 0.31%, Palantir down 0.44%, First Solar down 0.54%, Vistra down 0.62%, Meta down 0.76%, Taiwan Semiconductor Manufacturing Company down 0.90%, and Broadcom down 0.90%. Most of them fell by less than 1%, just a small drop. The rest, Celestica was down 1.29%, and Talon Energy was down 1.66%. Lastly, Nextracker dropped 2.03%, continuing to hold its position as the stock with the worst recent trend. Now today, I think we need to take a look at the current status of the major stocks that led the market yesterday. Yesterday and in the past few days, stocks like Advanced Micro Devices Coinbase and those related to Bitcoin have actually been leading the market. And yesterday, interestingly, Tesla suddenly showed a sharp rise of 4.73%. So in today's broadcast, first of all, we need to check what happened with Tesla. There were two pieces of good news. The first is the welcome news that Tesla is expanding its robotaxi service to Phoenix. Tesla has reportedly submitted an application to the authorities to test and deploy robotaxis in Phoenix, Arizona, where its competitor Waymo is already operating its service. What about this application? Initially, it includes tests both with a human safety driver on board and later without one. The approval decision is expected to be made at the end of July. So soon, not only in Austin, Texas, but also in Phoenix, Arizona, there is positive news that we will finally be able to see Tesla's robotaxi. Now, the second piece of news is actually even more amazing. Regarding this, I'd like to share some of my own detailed personal opinions. That's why I added Mijun's recommended content to the title. Now, if you look at the title of this news, it says that the chatbot Grok will be installed in Tesla vehicles. Now, I'll also share my personal opinion later on about how significant this is. Elon Musk announced that Grok, the chatbot from his artificial intelligence startup, X Artificial Intelligence, will be installed in Tesla vehicles. Musk posted on X on Thursday that Grok will soon be installed in Tesla vehicles. He shared the good news that it will happen by next week at the latest. Musk mentioned this plan just a few hours after announcing the new version of Grok through a live video stream. Musk and his XAI team members talked about improved voice conversation features and the new artificial intelligence system. They boasted benchmark results showing higher scores than OpenAI and other competitors' models. So, this chatbot called Grok, developed by Elon Musk, is by no means inferior when compared to OpenAI's chatbot. It has excellent performance, and this is being proven with numerical data. Integrating Grok into Tesla vehicles suggests an expansion of the relationship between the electric car manufacturer and XAI. And this, some Tesla investors have been strongly demanding this amid sluggish sales, so it can be positively evaluated that the investors' demands have finally been realized. Now, let me explain in detail why I consider this article to be so important. I don't remember exactly when it was. There was an American drama that could be seen on Korean television a long time ago. The title was Airwolf. There was a car called Knight Industries 2000 that appeared in it. This article reminds me of Knight Industries 2000. It can be compressed like this. The group chatbot mentioned in this article goes far beyond the infotainment systems we already know, such as natural language conversation, voice commands, and real-time information provision. We can infer that it will serve as an artificial intelligence-based assistant. Now, if that's the case, the driver will be able to give commands as if talking to the car. Since even complex functions can be used easily, the appeal of Tesla vehicles could increase significantly. So if they get ahead in this artificial intelligence chatbot technology, it could actually lead to better sales for Tesla cars. Currently, car voice assistants are limited to simple commands like turn on the air conditioner or turn on the radio. But as I mentioned earlier, if it reaches the level of ChatGPT, it's a really clever, smart kind of chatbot. So the reason it can provide real-time information is because it's connected to the X platform. Think of it as a conversational artificial intelligence that understands context. This means, for example, let's say we're driving and we ask the chatbot a question. Find some Italian restaurants nearby that are good for dinner tonight, or find a Korean restaurant, something like that. Please find a place that's not too noisy and has convenient parking. So now, it's possible to handle these kinds of complicated and emotional requests. Now what that means is, Tesla cars are no longer just simple electric vehicles. They're actually smart cars driving on the road. Tesla has emphasized its identity as not just an electric car company, but also as an artificial intelligence and robotics company. Now, what about the installation of Grok this time? This could be the most direct opportunity to imprint such a brand image on consumers. Therefore, even for consumers who still think of Tesla as just an electric car, this news could make them realize that it's really becoming a smart car you can talk to and have conversations with. Their perception could change like this. Competitors are quickly catching up to Tesla in terms of electric vehicle range and performance. Is that so given this situation? It's possible to infer that software and artificial intelligence experience, rather than hardware, will play a major role in completely changing the landscape of competition. Let me give you an example to explain. In the past, the main criterion for buying a cell phone was the quality of phone calls. There was a time when we bought a cell phone, we really cared about how well it got reception, how clearly we could hear, and what the call quality was like. But at some point, nobody checks the call quality when buying a phone anymore. When deciding between Samsung or Apple, nobody really checks how well it makes calls. Now, it's the same with Grok being installed in Tesla. When buying a car, we've always considered how well it drives or how comfortable the ride is. But from now on, how smart the car is could become the main standard, and this could be a catalyst that completely changes our way of thinking. The reason investors are already giving Tesla such a high value, with its premium rising so much and its high price-to-earnings ratio, is not because of car sales, but because of the potential of its artificial intelligence technology. We all know this part. And this time, the integration of Grok makes the synergy between Tesla and xAI visible and proves that Tesla is a key player not only in autonomous driving robots, but also in the field of conversational artificial intelligence. So until now, when most people talked about Tesla, they talked about electric cars, and recently they talk about autonomous driving and Optimus, these two things. But that's not all. Now the new investment appeal of smart cars is finally becoming full-fledged. That's how we can wrap this up. Now there's one more thing I'd like to emphasize. Right now, there are already millions of Tesla vehicles on the roads around the world. Then, there must be a lot of conversations happening inside those vehicles. What about the actual conversation data between the driver and Grok? In the future, we can infer that this could become an exclusive and valuable asset for training Grok and the full self-driving artificial intelligence model, something other car companies can't have. Well, that's because the more data you have, the smarter artificial intelligence becomes. Considering this formula, it's expected that over time, this will create a data moat that exponentially widens the technological gap with competitors. So the news I shared with you today is, despite the flood of bad news and all the drama surrounding the chief executive officer, it once again reminds us why we can't completely remove Tesla stock from our portfolio. Personally, that's what I think. Now next is the momentum of Tesla stock. The momentum indicators aren't that good, are they? Right now, out of 26 indicators, 10 are showing sell and 8 are showing buy, so the selling pressure is a bit higher. If you actually look at the relative strength index, it's staying below 50, and what that means is it's currently lagging behind the overall market momentum. You can see it that way, and the stock chart doesn't look very good either. At the moment, you can see that there's a box range formed between the support level at $300 and the resistance at $365. This is $365 up here, and down here is $300. Currently, the stock price is slightly rising from the $300 level. You can see it as an attempt to rebound. All right. If it breaks above the 21-day moving average, the short-term resistance line, it could potentially rise again to the top of the box range at $365. As of now, the stock price has just crossed above the 61-day moving average, and fortunately, it's now heading toward the 21-day moving average. Since the 21-day moving average is at $318, it needs to break above this level to confirm an upward trend. That's how you should see it. Now, if you look yesterday, the stock price surged and barely crossed the 60-day moving average at $308. There's also the support line at $300. If you look here, there's another solid support line with two previous lows holding it up. So if the $308 and $300 support lines break, there's a high chance it could turn into a downward trend. If that happens, there's another box below here, and it's possible that the trend could continue to fall toward the lower side of that box area. That's how I see it. The next article we have prepared is about Bitcoin. Bitcoin suddenly broke through its all-time high. It created an incredible upward trend in a short period of time. So, I'd like to share my personal opinion about Bitcoin with you once again. Now, in this article, the co-chairman of the Hong Kong F3 Association, Joshua, also appears. According to this expert, what's the reason Bitcoin is hitting a new all-time high like this? He says it's being driven by relentless institutional accumulation. And he also says that a lot of companies have recently been absorbing supply and depleting liquidity on exchanges. In other words, there's a frenzy because there's not enough Bitcoin. So you can see that the price is rising right now according to the law of supply and demand. I've emphasized this many times before, but I don't know much about Bitcoin. But there is one thing I believe in, and that's the law of supply and demand. Two basic factors, limited supply and rapidly increasing demand. I believe that these determine the long-term direction of Bitcoin's price. That's why I'm investing heavily in Bitcoin-related stocks. Now, on the supply side, there's an event every 4 years where Bitcoin cuts its new supply in half. We call this the halving. And this mechanism gradually slows down the rate at which new Bitcoins are released into the market, meaning that over time, Bitcoins become more scarce. So you can see that over time, this has the effect of maximizing scarcity. Now, in this situation where the new supply keeps decreasing, if the trend of increasing demand can surpass the increase in supply, what do you think will happen in the end? It's reasonable to think that the price of Bitcoin will keep going up. So what that means is, as long as demand goes up, that's all it takes. Now, if you look at the demand side, the early Bitcoin market was centered around very brave individual investors. I couldn't even imagine investing in it. But now, not only brave individual investors like myself, but also institutional investors, corporations, and even countries are participating, leading to a structural change. And what about these changes? I would like to say that this is not just a temporary trend, but the beginning of a huge era where Bitcoin is being included as part of asset portfolios. And there's a reason for this trend, right? Early last year, a Bitcoin spot exchange traded fund was approved in the United States. This can be seen as the catalyst for this trend, and here's why. With the introduction of the Bitcoin spot exchange traded fund, large conservative institutions like pension funds and asset management companies now have an easy and regulated way to invest in Bitcoin. Before that, even if they wanted to invest, regulations made it impossible for them to freely invest in Bitcoin. Now, in addition, for quite a long time, the regulations from governments and financial authorities around the world have been in place. They were one of the biggest factors negatively affecting the digital asset market. But how is it now? Now, with the Trump administration in office, they are implementing more friendly policies than any previous government. Therefore, I believe it's a very reasonable assumption that during Trump's term, the price of Bitcoin will reach a much higher level than it is now. Now, I want to say that a logical and reasonable decision like this is very likely to lead to a successful outcome. Of course, the process can be rough and highly volatile. Bitcoin is known for being more volatile than any other asset. But instead of being swayed by the daily ups and downs in price, there's a very famous rule we learned in elementary school, the law of supply and demand. I want to emphasize that it's better to approach this from a long-term perspective, keeping faith in these basic principles. Bitcoin is currently exhibiting a robust buy signal, indicating strong momentum. That's because there isn't a single momentum indicator suggesting a sell right now, while there are as many as 16 momentum indicators suggesting a buy. However, since the relative strength index is currently at 73, I can say that it's showing an overbought condition right now. Next, let's look at Bitcoin's stock chart, the price chart. If you look at the price chart, you can see that it has just hit a new all-time high and is rising very quickly. What's especially positive is that trading volume has also been steadily supporting the price increase recently. When trading volume increases at the point of breaking through a new all-time high like this, it gives us confidence that this upward trend is very strong. Now, there's one thing we need to consider. Currently, the price is quite far away from the moving averages. The price has risen significantly, surpassing both the 20-day and 60-day moving averages. Now, when the gap widens this much, it's a sign of overheating in the short term. Therefore, a technical correction could occur. This is something we need to take into consideration. However, even if there is a temporary correction, as long as the new support level around 116,000 is not broken, right around here, if this area holds, we can expect buying pressure to come in and the upward trend to continue. However, if the upward trend breaks and it falls back below 116,000, then we can define this breakout as a false breakout. If that happens, the short-term correction could deepen, and I would say there's a high possibility that it could fall to around 107,000 or 108,000, where the 20-day and 60-day moving averages are clustered. The last content prepared for today is today's United States stock video. In today's video, Wall Street optimist Tommy appears, and lately, Tommy's reputation has been remarkable. That's because while everyone else was anxious, he consistently delivered the message that stock prices would rise, and he once again proved his sharp insight by accurately predicting the recent upward trend. In today's video, Tommy discusses Nvidia after a long break. So, I think it would be good for you to check out through this video how Tommy evaluates Nvidia and what he thinks about the current state of the market. That's all for this week's final broadcast. I sincerely want to thank everyone who invested with me Jung this week as well. The comments and likes you leave give me the strength to keep going. Even if it's a bit of a hassle, I hope you'll leave lots of valuable comments. Let's all keep fighting together until the day we all retire through investing in United States stocks. Have a happy day. Thank you.
I'm Tom Lee, Head of Research at Fundstrat Global Advisors, Chief Investment Officer of Fundstrat Capital, and a contributor to CNBC. Nice to meet you, Tom. Taking a step back, how do you view Nvidia reaching a $4 trillion market cap in the context of overall expanding artificial intelligence demand and a market environment with increased risk appetite, such as the rise in Bitcoin?
I think it's quite reasonable that it became the most valuable company in the S&P. Such companies are extremely rare. There are 50,000 stocks worldwide, but there's only one Nvidia. You could say it's even rarer than Da Vinci. So even if the price-to-earnings ratio is 30 times considering its importance in the artificial intelligence ecosystem, I don't think it's excessive. I think the profit visibility is high, and there's also potential for multiple expansion.
Is there room for multiple expansion not only for Nvidia, but also for the Nasdaq as a whole? Could it play the role of a driving force in the next bull market?
I think companies that show continuous and solid profit growth like Palantir, Nvidia, and Tesla deserve to be valued at higher valuations. One of the topics we've been analyzing recently is that despite the market experiencing 6 virtually black swan events over the past 5 years, it has held up very well in terms of profits and has even grown. In this situation, it would be reasonable to assign a higher P/E ratio to the entire market. The S&P 500 equal-weighted index shows the average P/E ratio was 17.9 times pre-COVID-19, but now it's around 16 times, 0.7 points lower. In other words, even after going through 6 crises, the market is actually more undervalued. I actually think now is the time when the P/E ratio should be expanding.
That's how I see it. The top 10 stocks make up about 40% of the market cap, and NVIDIA alone accounts for almost 8%. That's right.
But it's also important to note that the top stocks account for a large portion of actual profit growth. The S&P 500 is currently at the center of artificial intelligence, which is also a key driver of the global increase in capital investment. And as a result, it's a factor leading S&P profit growth. Another important pillar is financial innovation. Progress in areas like Circle and cryptocurrency is becoming another source of profit growth, and these are expanding sectors within the S&P.
I'd like to talk about a company called Bitmine Emerging Technologies. You recently became the chairman of that company, right? There are a few things I'd like to confirm. The price recently reached a high of 161 amid volatility. The company also raised about $250 million through a private investment in public equity investment, selling around 55 million shares at about $4.50 per share. Those shares haven't been registered yet, right? That's right, they're scheduled to be registered. All right, I really want to make sure we address this part. On the surface, it might look like there are 10 million shares outstanding and a market cap of about $300 million, but in reality, at least 63 million shares are being traded, so even if the stock price is $55, the market cap reaches several billion dollars. They're buying Ethereum with $250 million, or maybe there's a bit of Bitcoin included as well. Is it mostly Ethereum? Yes, it's Ethereum. So this stock is trading at a much higher multiple compared to the actual amount of Ethereum they can buy with the funds raised through the private investment in public equity investment. Yes?
The press release contained information about Ethereum's financial strategy. From our perspective, it seems these companies are taking a logical strategy to increase their Ethereum holdings by leveraging the premium of the capital market. That's because they're actually trying to use the funds they've raised to increase their Ethereum holdings.
What I'm saying is that they can increase the value of their total assets through various activities within the Ethereum ecosystem.
Yes, including taking advantage of the premiums that exist in the capital markets. These days, Ethereum is being re-examined. Ethereum is one of the most profitable crypto assets and has recently surged. If you look at the annualized return, it's a really big increase. Especially stablecoins are a turning point for the crypto market, just like ChatGPT was. Circle has completely opened up the market, and even Wall Street is showing a lot of interest in developing Ethereum and stablecoins. Currently, about 30% of Ethereum network usage is related to stablecoins.
Unlike Bitcoin, which is like digital gold, Ethereum is the technology itself. There's also a chance that Solana and other competitors could capture some of its market share.
That's right. Companies like John Pierpont Morgan and Robinhood are also conducting stablecoin and tokenization businesses based on Ethereum. Ethereum is the layer 1 blockchain preferred by Wall Street, and it already accounts for more than 60% of real-world asset tokenization. If the stablecoin market grows to over $2 trillion, the use of Ethereum will also increase explosively, and this is a very positive sign. For your reference, Circle is trading at about 100 times EBTA.
However, what those who want to buy this stock, retail investors, need to know is that you are currently investing at a much higher multiple than the value of Ethereum. Also, I understand that you are operating an automated teller machine market and a stock issuance program as well. Is that correct?
Yes, the S3 document has been submitted. I'm not in a position to comment on the valuation of the company.
Well, I'm not sure. With over 60 million outstanding shares and a share price of $55, the market capitalization is approximately $3.5 billion, not accounting for additional shares being issued through the automated teller machine. That's about 11 or 12 times the value of the Ethereum they hold. That's just a simple calculation, yes?
Or in the end, it all depends on how much actual results these activities produce, of course.